How's it going, everybody? So today we're going to be going over Aurora Cannabis's earnings report. But before we do that, please, I would appreciate it if you drop a like and subscribe and drop a comment. Let me know if you own any cannabis stocks or if you believe in the cannabis sector or why you don't own any cannabis stocks right now. But anyways, let's get right into it. So let's take a look at Aurora Cannabis. And as you see, Aurora Cannabis is at $7.16, and today there wasn't very much movement except for in the beginning. And after hours, it is down 0.14%. Let's take a look at the past week. And in the past week, it is down 6%. So let's actually take a look at some of the numbers. And as you see here, the net revenue came in at 54.2 million Canadian dollars, which was up 83% from the first fiscal quarter, which is more than quadrupled what they did last year. However, Aurora reported a huge loss of 237.8 million Canadian dollars, and mostly that is due to their investments, which contributed that to 190 million of that. Also, Aurora had good news with its production capacity. The company said it produced more than 7,800 kilos of cannabis during the quarter, up 57% from 3 months ago and more than 6 times what it produced a year ago. Similarly, kilos sold rose to nearly 7,000, with the rollout of recreational cannabis in Canada contributing considerably to Aurora's distribution. Sales to the Canadian consumer market represented about 40% of Aurora's overall revenue for the period, with medical marijuana sales making up most of the remainder of the company's cannabis-related sales. Aurora stated in its Q2 earnings announcement that it intends to continue prioritizing medical patients in Canada and globally, where margins continue to exceed those achieved on the wholesale consumer market. Recreational pot might be what everyone is interested in, but for now, medical cannabis is better for Aurora's bottom line. Average cash cost of dried cannabis jumped by nearly a third to $1.92 per gram, with the company citing higher expenses related to the ramp-up of Aurora Sky facility in Edmonton and the regulatory costs connected to the launch of recreational cannabis throughout Canada. Aurora tried to reassure investors that the increase should be temporary and cost savings should result from the optimization of new production facilities as they fully come online. CEO Terry Booth was happy with the way the company performed during the period. Aurora continues to execute strongly across all of its market segments, and our brand continues to resonate extremely well in the consumer market. So the gross margin is about 54%, and that's what Aurora reported in the second quarter, but this is a steep drop from the 70% gross margin achieved in the previous quarter. And this is due to several reasons, including a lower average selling price per gram of dried cannabis, excess taxes on medical cannabis, and a lower mix of higher profit cannabis oil sales. In addition, Aurora had absorbed higher costs from new packaging requirements for recreational marijuana products and initial expenses from bringing its Aurora Sky facility to full production. The good news is, though, this is probably just a one-time cost associated with the packaging requirements, and the Aurora Sky ramp-up will go away. Aurora also launched its soft gels in December, which should help boost margins in future quarters. In addition, the anticipated opening of the Canadian market for cannabis edibles, beverages, and concentrates later this year will give Aurora new opportunities for higher margin products. Aurora pointed to a large number of new supply agreements to expand its international scope. Exports to Poland, Luxembourg, Mexico, the UK, and Czech Republic were the latest in what is now an operation that touches almost 24 countries worldwide. At the same time, acquisitions have played a key role, and further mergers, both during and after the fiscal second quarter, shows Aurora's commitment to growing by all available means. The company reported a net revenue of 2.9 million Canadian dollars from sales in Europe, and that's only 6% of Aurora's total cannabis revenue. European medical cannabis sales barely increased from the previous quarter, up only 1.8%. These numbers could improve in the future as Aurora markets cannabis oils and other products other than dried cannabis. And also, dilution shouldn't be a concern anytime soon. Aurora CFO Glenn Ebot noted that the company recently completed the placement of its US $345 million in convertible notes. This gives Aurora a strong cash position to fund operations and expansion in 2019. And perhaps the best news of Aurora's quarter two is related to its production capacity. The company is already operating at an annualized production run rate of around 120,000 kilograms. By March 31st, 2019, Aurora thinks that the rate will increase to more than 150,000 kilograms. With demand outstripping supply in the Canadian market, capacity is king, and Aurora's numbers show that it is wearing the crown, guys. So let me know down in the comments how you thought Aurora Cannabis did. I feel like they did pretty well, and by the looks of it, the next few quarters should do even better than this one, and it should be because of the evaluation that these cannabis stocks have. They should be dropping huge numbers every earnings. And yeah, guys, we'll see how much more Aurora Cannabis does in fact drop, and I will have to be buying some Aurora Cannabis if in fact drops to around $6. Then I'll be putting some cash into my position. And that's the end of the video, guys. Please drop a like, subscribe, and turn post notifications on, and I'll see you guys in the next one.